Welcome to InsurTalk. Utmost good faith. As you would have noticed, I have been posting videos on fundamental concepts or principles of general insurance. This video is about utmost good faith. What is utmost good faith? How is it different from plain and simple good faith? Why utmost good faith is so important to insurance? Utmost good faith requires the contracting parties to disclose all material information known to them before concluding the contract. The parties should volunteer to provide the information even if not asked. This is a special requirement for insurance contracts. In other contracts, there may be no such obligation and normal good faith is sufficient. But why such a special requirement? For this, one must understand the concept of basis risk. In insurance, like any other contract involving hedging of risk, there is a speculative element. The insurer calculates the risk he assumes in terms of probability and magnitude of outcome. Then he makes a decision whether to accept the risk offered to him, and if so, at what premium, terms, and conditions. Now, the difference between the quantification of the risk assumed done by the insurer and the actual underwriting outcome is known as the basis risk. This basis risk is influenced by things that the insured knows but the insurer does not. So in other words, if you have a quantification of risk which is done by the insurer and there is an actual underwriting outcome, this difference, this spread is known as the basis risk. For insurance business to be viable, the basis risk has to be kept as low as practicable. If the insured hides or does not disclose material information which the insurer has no other means of knowing, then the basis risk increases. The insurance business can then become unviable. So to ensure that the basis risk is reduced and the insurer is not induced into accepting a risk or charging inappropriate rates, terms, and conditions for the acceptance, the principle of utmost good faith becomes a contractual requirement. And utmost good faith is not just a pre-contractual requirement. It also continues after the risk has been accepted. Insurance policies usually have a material change condition that requires the insured to inform of any changes that can influence the decision of a prudent underwriter after the risk has been assumed. For example, say this office where I am sitting in has been insured under fire policy. Tomorrow I start a shop also in the same premises along with the office. So the presence of the shop changes my risk profile. The basis on risk, my risk was accepted by the insurer has changed. And this requires my risk to be re-underwritten at different rates, terms, and conditions. If I don't disclose this information that I have started a shop within this premises to the insurance company, then the insurance company's risk or the basis risk goes up. So any change that increases the basis risk becomes a material change for the underwriter, which needs to be informed to the insurer. So careful consideration must be given to utmost good faith principle, and in case you are in doubt as to whether something some information is material or not, that ought to be informed to the insurer or not, the best person to ask is the insurer himself. Thank you.